6-day winning streak for the S&P, going for 7. What's helping out? What do you know? It's the semiconductors, TSM, giving some good guidance. We'll talk about a lot of ratings today. They sure really moved some stocks yesterday, moved some up, some down. 8:35. Brian Shannon joining us here on Pre-Market Prep. And let's get fired up. Let's get things started.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. Took off right off that open, up 13.25 handles, 56.44.50, knocking on the door of the all-time high at 45.75. The buck down a few pennies, 104.75. TLT up 40 cents, 92.75. Got three highs in the same area. Let's see if we can bust into the 93 handle. Crude down 11 cents at 81.30. Took out yesterday's low, trying to rebound. Gold marching towards 2,400, up 17.50 at 23.85.40. Silver in the green, that's up 26 cents, 31.32. Bitcoin futures trying to get above 60K, up $535. 58,695. Let's bring on Triple D on this Wednesday. How are you doing?
A little bit less tired. It was a tired day yesterday. Kids are both still sick. One's starting to get better, but I think we might have that COVID again. Like it's been going around. The third strain never goes away. I think it could be, but it's hard to say. I didn't do a COVID test or anything. I mean, it's just basically just the flu now. But they had sore throats and fevers. Actually, the girl's coming out of it today, but the boy is a day or two behind her, and he's just laying on the couch. So we're fighting that off. I haven't got it yet, so hopefully I stay healthy.
Okay, let's bring in, I don't know if we're going to recognize this guy here, but we got yet another new producer of the show here. Let's bring in, who is this guy? Let's have this guy. Look at this guy. Who is that guy? Clean cut, shaved, and a haircut? Did your mom watch the show yesterday or something? What's going on, AB? You're looking sharp.
I appreciate it. Yeah, my mom wasn't too happy when I came home without having got a haircut in a few months, and really that was the first catalyst. The second was the other night I was playing tennis, and my hair was so long that once it gets a little wet and sweaty, it was getting in my eyes. And I was watching Wimbledon yesterday, and I don't know if you guys probably don't follow tennis that closely, but
parlay on Wimbledon.
I did. Actually, I hit one yesterday. $50 to win $50 to win 500. But anyway, most of the guys playing in it, this Medvedev and all these guys, they have like long hair with their bands on. And then the one guy that's the best, Carlos Alcaraz, he's got a clean cut, like the haircut that I got. And I'm like, maybe that's why he's better, is because you don't have to worry about his long hair. And this guy is so unreal, Carlos Alcaraz. Like I grew up watching Federer, Nadal. I'll say it right now. This kid, Carlos Alcaraz, Spanish kid, better than all of them. He's going to go down as the best tennis player. He's going to go.
What about Djokovic?
Nike, are you listening? You could sign somebody early. Get him.
The best tennis player of all time. He will go down as Carlos Alcaraz. He is just unreal. You're just watching greatness when you watch him play, because he's that good. And I did win a bet on him yesterday, so that was nice.
Let's see who's his sponsor. He's Nike, Dennis.
Oh, he is. He's already got him.
Oh, man.
Nike, that's going to be huge. That's the next, yeah.
There you go. We're looking for a catalyst.
Next Federer.
Yeah. All right. So
Nike catalyst. If he wins Wimbledon, I will initiate Nike with a buy if he wins Wimbledon.
Yeah, well, he did last year, so we'll do. It'll be a repeat. But let's bring it to the markets real quick. I assume that people in the chat don't want to talk too much about tennis or hear about my sports gambling. And we had yesterday a little bit of a tone shift from Jerome Powell when he was speaking. He was testifying to Congress for basically the past year and a half. Powell's main concern when talking has, of course, been about inflation, and he's basically been a broken record. We need more and more data to back up that inflation's coming down. And yesterday, he finally acknowledged that the labor market's been cooling down, that the Fed's at a point now where they're risking, if they continue to keep rates too high, that we could actually see, a recession or a slowdown in the economy. So here, let me pull up a direct quote from Powell here, that he was basically, again, saying reducing policy restraint too late or too little could unduly weaken economic activity and employment. But then on the other side, Powell also says that lowering rates too soon could stall or even reverse the progress we've seen on inflation. So either way, it sounded like, while still acknowledging the inflation aspect of it, that he is now saying that basically the Fed is starting to get concerned about an economic slowdown. They are seeing the fact that labor markets are cooling down a little bit, and that the economy, he said, is not overheated anymore. So I don't think this changes anything in terms of like the 2 rate cuts that the market has been pricing in, but certainly
But it sounds like September right now, barring other economic data, which we get tomorrow, could be a go. Sounds like September could be a go.
Yeah,
that's how I would read that.
100%. And I think a lot of people that have been, talking about, I don't think there's going to be any rate cuts in September. The inflation's still too high, whatever. But now when you have the chairman of the Fed talking about that they're worried about an economic slowdown and that the economy is not overheated anymore, it feels like there's a little bit more leeway here. And again, we're talking about 25 basis point cuts. We're not talking about them going from 5.25% interest rates down to 3% overnight. We're talking about a very small cut that's likely to not even really move the bar in terms of the market. Like, I don't think the market's going to shoot higher that much off a 25 basis point cut, especially when it's been expected for a while now.
Couple things. Number one, September, I mean, his tone yesterday definitely softened as far as that. I mean, just with the election, I don't know if they want to, they'll call it a political move. So I don't know if they'll do it for that. I think we just got to get the data, right? We got to get the data tomorrow. We got to get the data on Friday. As far as the TSM goes, you had that big move from 95, the correction 95 to 90. You've gotten halfway back of that move, and you got 3 highs in the same area here. So if this thing could get in that 93 handle, get some soft data tomorrow, maybe go back up and test that high of the move at 95. But I'm going to stick with my mantra that I've been saying for a long time. I think rates are going to be steady. They're not going up. I think we've seen they're not going up anymore. And if they're going to go down, they're going to go down for a reason. They're going to go down incrementally. But are people that are looking for that free money that we had, down at those ridiculously low rates, that's not coming. Well, they'll come down. They'll come down a little bit when needed. But I think we're going to be in a stable interest rate environment for a few years, at least years to come.
Yeah, we're going to come down a lot. We're not coming down to where we were. So I think they've realized the economy can handle a little bit higher rates. And we were brought down so much from COVID, trying to stimulate. I mean, that was all just bonus, like for low interest rates there. So I think you're right, Joel. I think it is higher for longer, but it does sound like we do have some cuts coming. So that makes you start thinking, not obviously imminently jumping into all these stocks that have been severely punished. But the one sector that obviously needs it more than anything, we've talked about this sector, before, is the TAN, solar stocks. So I don't think it's coincidence that they're starting to show a little bit of life here as we start to get a slight change in tone. It may be early, though. We're coming in. Obviously, CPI is what's going to matter for all these stocks tomorrow. If you're buying these things ahead of the CPI, that's a gamble, because if it comes in just a little bit hot, all the air comes out immediately. But, if TLT can start to sustain a little bit of a rally, if the CPI can come out light, the solar stocks could get another lift. So just keep that in mind if you're trading these things. Tomorrow is a very big day for everything that's interest rate sensitive.
Yeah, and real quick before we move on to some stock-specific news, I'll just give a quick preview on the CPI tomorrow. So going back to May's CPI, we saw the consumer price index stay flat, 0.0% in May. It's actually expected to go up to 0.1% in June. but the year-over-year CPI is expected to fall from 3.3% to 3.1%. So you do kind of have a high bar there where we're expecting the year-over-year CPI to drop 0.2% down to basically 3% flat. We're expecting core CPI in June to be 0.2%, which would be the same as it was the previous month. And we're expecting core CPI to stay the same at 3.4% here. So again, the year-over-year CPI is expected to drop to 3.1% from 3.3%. So if that happens, while we're seeing and hearing from Powell that the labor market is slowing down, again, I think that would be more, more fodder for the camp saying that we need to cut rates in either September. And I even saw some people saying that July cuts, not necessarily completely off the board, but definitely not likely at this point. But all right,
Wait, I'm sorry, Aaron. I just want to interrupt two
Yeah.
things here. I want to stay on this solar for a
Yeah.
second. First of all, I guess if you go to best in breed here, First Solar, over $300, down to 220. Hardly talked about it. Found some support under 220. Paul Adler said, hey, he's going with the best in breed. And I'll just tell Paul here that, you got, look at these last three highs, not including yesterday, right around this 233 area. That's still $6-7 away, but I'm looking at that. If you could clear that area, more room on the upside. And Dennis, someone was just asking about clarification, for the CPI number and the solar stocks, which we could just go into that. We just need lower rates. A lot of these, solar projects are financed, and they're hard to finance at these rates.
Well, and it kills projects too. I mean, you just put your CFA cap on there and you're calculating internal rates of return and figuring it all out. When you jack up that risk-free rate, when you jack up the interest rates, all of a sudden those projects become a lot less attractive. And that's what you've seen happen is probably a lot of projects actually not even about, just getting killed, meaning they're not doing the projects, meaning they're not going and buying projects from companies like Solar Edge. So, I mean, as interest rates come down, then projects start to get more attractive. I think I'd go, if I'm going to go solar, it's going to be best of breed too. It would be First Solar. I mean, you can see more wicked bounces and stuff like Solar Edge, but they've just been such, tough death traps here. If you're looking at investing wise in the sector, I'd probably invest with the best as well. If you're looking at trading, you'll probably get a better response in an SEDG or an ENPH if the CPI data comes in light tomorrow. So if CPI data comes in light, I'd be looking to buy those couple of stocks just as trades.
All right, let's move on to some stock-specific news. We did have a stock in the semiconductor space not report earnings, but reported some preliminary revenue numbers, and that is TSM, Taiwan Semiconductor. Again, this is the company that is physically manufacturing the chips for NVIDIA, for AMD, for basically all the big players in the space. And all right, I'll be honest, guys. I don't know what currency this is in, but 207 billion NT the currency is. But either way, that's not what matters. Up 33% year over year revenue for the Q2 in the June month for Taiwan Semi. So you're seeing so the stock bouncing. I'm honestly surprised not to see it up more, but it's up about 2.5% this morning on this revenue year-over-year increase. And then the actual earnings for Taiwan Semi are set to come on Monday, July 22nd.
It's the new Taiwan dollar, 0.031 to the US dollar at this point.
NT?
Yes.
Okay, so someone do the math in there. What's 207 billion? You said 0.3?
0.31.
Oh, man. Okay.
I'm not a currency. I'm not trading Taiwan dollars. I'm not even a currency player. So I'm just going to stay away from that. I'll say Taiwan Semiconductor has just been running. Obviously, this is one of the core ones that have been trading with NVIDIA here as well. It's right. Obviously, we're getting, so Taiwan Semiconductor has just been in favor for a very long time. So the expectations and the bar is very high too. So when you see a blow away here, it's not surprising to anyone. sometimes I'd be concerned if this didn't get up over 192. You want to see this take out those highs on this good news. If it doesn't, it actually could be one of those fade the news events. So just be careful just flat out chasing this, saying, oh, they're killing it, and it's going to continue to go up forever, because the trade is overextended. I know Nvidia is starting to show some life again, which is good. AMD started to show some life. We're starting to see some of the other ones come back around a little bit here, but Taiwan Semiconductor has come a long ways here, so expectations are still very high. Let's see what happens when this thing opens at 9:30.
192.80 is the all-time high. Dennis referenced there. But if you want a number that's more relevant right now from where we're trading, 186.63 is the all-time closing high. That came on Monday, so keep an eye on that if you want to see improvement in the all-time closing high. Looks like you sniffed out a little bit of a seller here at 190. That stands as your pre-market high. So if you're looking for follow through to that 192 area, first things first, let's take out 190. Nvidia has cleared that 50% retracement we talked about at 129.80. That's getting a boost from that news. We will just look at this bar here. This was a nasty bar. So pick and choose here in the 130 handle, because you had that one day, very few reference points here. You fell from 140.76 all the way down to 130.78 that day. So if you're looking to choose your exit here in the 133 handle, or 130 handle, there are no relevant numbers. Broadcom, once again, bunching up. Look
running
at this.
ahead of the split too. The split's next week. So, we're starting to see some life here again. I don't think it's coincidental. Obviously, Nancy Pelosi bought it, so it got the Pelosi pop, but it's holding on here too because the split's coming. And we did see this stock, obviously, of CMG. We saw, obviously, who was the other one that split? Well, Nvidia really ran into the split.
Not CMG, right?
It's exactly textbook, Joel. CMG ran into the split, then got the post-split hangover, and that's exactly what you're seeing here. So, I mean, I've traded this from a quantitative perspective, splits for 25 years. They typically run in the split, and they're typically week after. CMG was textbook.
The split for AV Go for Broadcom technically is this Friday, but the first day trading will be next Monday. I believe that is July 15th. Yep. So again, just be mindful of that. And then
I don't like being short ahead of the split because they get excited about it. And I wouldn't be surprised. It depends. I mean, this trades with NVIDIA, obviously. And obviously, if NVIDIA rolls over, it can bring this down too. But other things being equal means if NVIDIA is holding up here, I wouldn't be surprised to see AVGO get a lift the next couple of days ahead of the split. We got 3 days before the split.
3 days of consolidation too here. 3 days. Basically, if you're a range trader, a big range trader, 1,700 is pretty much been the lows. 1705 exactly is the exact double bottom, and yesterday's rally was capped at 1770.98. So it looks like a little bit of a tighter range on the chart than it is when you look at the numbers, but it'll be a lot more fun when it has that split and much lower price stock.
Not the only chip stock getting ready to split as well a few months down the road, but Lam Research, ticker LRCX, is getting ready to split. That won't be till October, which...
Oh, gosh, that's a long ways away. We won't even think about that one.
Not to mention
a calendar reminder.
Not to mention they announced it, like, I want to say 3 months ago. So they announced a split that's like 6 months down the road. I don't know, I guess, what the benefit or, when you decide to actually enact that split. Because we've had a few where they've announced it. Like NVIDIA's, I feel like they announced it and then it went into effect like within a month or something. But again, LRCX is getting ready to split. That will be October 3rd will be the first day that shares start trading on a post-split basis. So someone in the chat put in a little Siri or calendar reminder to just tell us the week before to buy that
There's
stock.
the chat. Every time we get something going to split, let us know a week before so we don't forget, because there's good opportunities there on the pre-split runs.
All right, let's move on to some restaurant stocks here. Not been doing too hot. You've got Darden Restaurants here trading lower. Darden, of course, runs.
Well, that's ex-dividend, so it's actually not down. DRA went ex-dividend for $1.40. Adjusted closes 138.89. but the stock is just not doing well. And we've been talking about this sector. I mean, Red Lobster bankruptcy. Again, Darden doesn't own Red Lobster, but it spun it off, and the businesses of Olive Garden and all of its other ones are similar. I think it was a tell when Red Lobster went bankrupt. It's like, I don't think I want to own these stocks here either.
Look at your Mickey D's, Dennis, man. That thing
I
is
called
just...
that one right too. We've been calling a lot of stuff right on this show.
A lot of stuff
so haters
right.
Take note. We hated this stock up at 280, 245. I still don't want to go in Mickey D's. Again, it's just boots on the ground. You go there, and it's not cheap. It's cheaper to sometimes to go and sit in a sit-down restaurant. Now, again, maybe McDonald's are listening to pre-market prep because they came out with the $5 combo when we started complaining about it. That's a little bit of a joke, but I mean, obviously they were hearing complaints from their customers. You go in there, you can't go to McDonald's and have to spend $40 on a family of four. It doesn't make any sense, or $50. It makes more sense to go to a nice sit-down restaurant then. So McDonald's got to figure out a way to get the prices down. They're maybe trying to figure out that, but it's early here yet. I think the stock is suffering because, man, inflation has hit them on both ends, labor inflation and probably food inflation. They're trying to pass on to the consumers, and the consumers are saying, I don't want to pay $5 or $6 for a Big Mac. So Bloomin' Brands, there's another one too. Restaurants have just been, it's a tale of two markets. You have so many stocks that are in full-on bear markets here, and the consumer is picking and choosing what they're doing. Even to the point of Helen of Troy yesterday, just looking at all their products, and that thing just did not bounce. We were worried about it, and it didn't bounce yesterday, and obviously continued to go lower. But there's a lot of discretionary stuff in here. So, and the CEO talked about that. That discretionary purchases, the consumers picking and choosing necessities over more luxury type stuff. I mean, they're talking about it, and they have boots on the ground all over the place here. The consumer has less money right now. There's certain things that the consumer's always going to buy, but there's other things that they are not buying. And a lot of them are obviously not going out to the restaurants as much as they were.
There it is.
That's why,
there it is. Yep.
And that's why you're seeing the restaurants really suffer here. So it's not a buy everything market that, rah, rah, bull, bull. I mean, there's a lot of sectors that are not doing well at all.
And you know what also is the big factor is, the rising wages, right? People want more money. Yep, that cuts into profit margins. So they're getting squeezed on that. But I mean, I'm trying to go through these restaurant stocks, and I'm trying to find one that has a good looking chart. I mean, Cake is like, they're all
Wendy's. Look at Wendy's. Same
Kava.
thing.
Kava's been doing well.
Let's see.
Again,
Kava.
those are like, but it's newer, so people are still going. It's still in its, like, what do you want to call it? Like, it's in its like honeymoon period.
Infancy.
Honeymoon period where people are like, oh, I haven't tried that. I want to go try that. I mean, Chipotle is starting to go down here too, but again, Chipotle's hangover from the split. I'm not as concerned about that one, but man, WEN, same story here. I mean, it's across the board. Restaurants just are not doing very well right now.
I went to Chipotle last night, actually. Big old burrito, nothing else, no chips, no guac, big old burrito. I asked for a cup for water. I might have filled it up with some soda and not water, but that's a story for another day. But $10. I mean, for a big old burrito, I was like, damn, like this is a good deal. Like people are complaining about all these prices. Like that might be the best deal in eating out right now. Is you can still go to Chipotle and get a big old bowl or burrito for $10. And I mean, like Chipotle is just a monster. Like there will be pullbacks in the stock, but it seems like one of those brands that is just such a staple now for so many Americans. There's one basketball player, Mikal Bridges, who said he's eaten Chipotle every single day for the past 15 years. I don't know if that counts like Christmas or whatever, but I disagree.
He's the reason this thing keeps going up.
Yeah.
I mean, it is concerning, though, when you're seeing all restaurants go down here. It makes me not want to be a hero on Chipotle and say, hey, I come in here right away. I mean, I want to see a base in Chipotle. Let's wait for a base, the little hook I talk about. I don't think I want to be a hero in any of the restaurants here right now. You're definitely seeing separation, clear separation in industries. And again, the AI tech trade has been unbelievable and probably, maybe continues. Obviously it's a little overextended. Maybe it needs a cooling period, but you go away from that AI tech trade. Man, if you weren't participating in that, you're massively underperforming this market because it's been tech and then there's everything else. And yes, there's going to be somebody, well, look at this. This stock's a non-tech stock. But we're just trying to say that, when you look at the average stock, it's really tech that is holding up the averages. I mean, if you took out, the major tech companies out of the S&P, you go and get the RSP. And the RSP is not up very much at all on the year. We started the year, I'm just trying to grab it, at 158, 163. I mean, we're up 3-4% here, Joel, on the year. That's your average stock. If you take the S&P and just equally weight them all, the 500, you're up like 3% this year, 4%. So if you got your long-term portfolio, you're only up 10%, you're like, man, I'm really underperforming. What's wrong? It's probably because you were underweight tech.
Well, speaking of stocks that are underperforming, Dennis, I know you were tweeting about it yesterday. Let's go to China real quick because we did see some Chinese stocks perk up yesterday. And we do have like a little bit of news here where China's top leaders will convene at a high-profile gathering next week, which some analysts say holds the potential to boost the Chinese stock market. You saw Baidu, you saw Baba, you saw a lot of these stocks perk up yesterday. I think Baba closed up like 3% yesterday, but Baba is actually giving up some of those gains this morning while Baidu is following through here. And you did have some analyst coverage over here at UBS. You had an analyst start getting kind of bullish some of these Chinese names. So is now the time, Dennis, to finally buy China stocks? I know we've kind of mistimed this in the past, but it's starting to look a little bit more attractive here.
I mean, I'm in Baba and Baidu, and I have an oversized position in Baidu, and it's been painful. I'm averaged in from 106. It was down at 85 yesterday, and I'm like, I don't totally, understand why the market hates this stock so much. I mean, this is the robo-taxi leader over in China too. We don't talk about that, but I mean, they're launching robo-taxis. They've got operational. I believe, I don't remember the cities. Is it Wuhan that they're operational in? But the robo-taxis are already operational over there. And Baidu, it's running on Baidu software. So I think Baidu, and I tweeted this yesterday, if Baidu was a U.S. company, this would be I said it could be a $500 stock. But because it's over in China with geopolitical risk and everybody just hates China stocks, because they think eventually they're going to invade Taiwan and they're all going to go to zero. I mean, this is just given such a discounted price. I love Baidu. I don't know if he can chase it after just ran 13 points, and I've been wrong about it, folks. I bought a 106, ran up to 114. I thought this was going to go. I even had some options that didn't work out, but it's just China stocks are hated. Finally, a little bit of love. It helped my portfolio big time yesterday with Baidu because I haven't sold any shares. I still believe in the long-term story here, but again, I don't know what makes the story stick. It gets hot for a day or two, and then it seems like just new sellers emerge. The overhead supply emerges, and it's just like, well, it's over in China. We don't care about China. We only care about what's over here. Baidu is very undervalued, but it hasn't mattered.
Room up to $100 here. We had the 115 down to 185 or down to 85. That's an easy retracement back up to 100. Not much in that area. Trading up in the pre-market, so that would get you halfway back, fill a few little gaps, but that's not as important in these stocks. But big day yesterday, up again, follow through in the pre-market. Baba, just flat here. At participated yesterday, but not participating today. If we could clear yesterday's high at 76.06, you got some room on the upside for Baba. Just take a look at JD. JD kind of quiet. That didn't really participate as much off the move. So the two laggards today, we'll see if they catch a bid, JD. And then let's just get an overall look at the FXI. Still, I mean, you got an area to lean on, this $26 area. The area, a couple lows from the end of June, and looks like you got some steady buyers. I won't call it like an Intel level like that we had at 30 with the long consolidation and accumulation, but it looks like the big boys are warming up to that 26 level in the FXI.
All right, before we move on from China, I've got an idea here, Dennis, and I know this probably isn't, typically your style in terms of trading. But we know Baba, it hasn't broken out really, but it hasn't it's dipped below $70 a couple times in the past year, but not by much. Why not just like sell calls at or sell puts at like $60, $65 and be willing to buy the stock down there if it dips there? Because I mean, if there's any spot where I'd be willing to buy BABA, it'd be anywhere under $70. I feel like that could be a good way to rake in some premium in the meantime while it's just hanging. I mean, look at this chart. It's just been hanging out down there for almost like 2 years now at 70, $65. Like if I were selling options or doing that type of trading, that's what I would look at doing here.
And again, the reason, so this can be an options talk, there's two sides to that story. I mean, the one downside of selling puts is you limit your upside, but you take on all the downside. So let's just say hypothetical situation. China actually does invade Taiwan. Baidu falls 50% that day, 60% that day, or if it even reopens, and you're absolutely crushed on that strategy. And then other scenario is, China never invades. Eventually valuation starts to matter to investors and BABA starts to run and run and run, and then you lose your stock. So you're taking majority of the downside, not getting the upside. I think I'd rather write puts on stocks that don't have geopolitical risk. So I would actually be very set against doing it on any China stock because of the geopolitical risk. I would rather own the stock and at least participate in the upside because I think these stocks are so massively undervalued. I think the only thing that holds them down is of geopolitical risk. It's probably a better maybe thing to buy call.
Like a leap,
because then maybe. But again, I don't think anything's imminent. Like the reason I hadn't been in BABA and Baidu for a long time, I recently bought them a few months ago because you're reading it and you're like, it just doesn't seem like there is any imminent invasion coming here. I feel like we've got a pretty good window here right now. It hasn't mattered to the U.S. investor. The stocks have continued to go down. But always the downside of writing puts is you take on the majority of the risk minus the premium, and obviously you limit your returns to just the premium. So that's the downside of, selling puts as opposed to buying the stock.
And there's also spreads you could do. I don't know if your platform allows you to do, put spreads that even, limit your upside more because of whatever you get for, the spread, the premium in the spread, or on the upside, if you're looking at it, I mean, you could do a really, wide call spread, with a good risk reward ratio.
Maybe that's a better way to go about it.
Yeah, because at least you have the option gods working with you, right? The decay, the natural decay of the options. So, yeah, you can take a look at it. You got a nice base here at the 72, 73 area. But you're right. I mean, one morning you wake up, Baba be up $15, or wake up one morning, you could be down $15. But
look at Baidu. I mean, here's case in point. Like you could have bought Baidu at $87 last week or sold puts on it. I probably guarantee you weren't getting $10 worth of premium. This thing just popped $11 in. It obviously depends on how far you go out, but it's popped $11 in 2 days. I mean, it's a huge gainer. I think the upside is just more than they're going to give you. I'd rather actually just own calls on these stocks. So there's not a lot of times I would rather own calls because obviously you're always got time decay and you're fighting, time when you're owning calls. But if I was doing selling puts or buying calls, because they're both bullish strategies, you can sell puts to collect the premium or buy calls and then collect the upside. I mean, I'd rather, I think, on these stocks actually own calls just because of the geopolitical risk.
Well, there you go. I mean, that makes sense. I'm glad that we brought that up at least because that kind of changes my opinion on it too. I think at this point with that, with knowing all of that, it would make more sense for me if I was trying to play BABA to buy some maybe like long outdated calls rather than selling puts where you again have that limited upside potential and setting yourself up for more risk. But all right.
I tweeted it yesterday though. Like I tweeted it yesterday. Actually 2 days ago, that China was starting to perk up here and starting to look attractive. I mean, obviously, the China did. I timed that tweet perfectly, but I've timed it bad too because I thought China was looking attractive a couple months ago when I started adding stocks here too. So I do think that I like what Kramer said the other day. He said BABA is the cheapest stock in the world. He's probably right. when you look at the growth of what is done, I don't know if we have any charts. We probably don't have anything. We can bring some in though. The revenue for Baba is up like tenfold over the course of the last 10 to 15 years. The stock is up nothing. I mean, if you would have told me 10 years ago that Baba would, go up the revenue would go up tenfold and the stock would go up nothing, I would be like, well, that doesn't make any sense at all. But that's exactly what has happened. So it is probably one of the cheapest stocks in the world. I don't know what turns the story around. And it just goes to show you the fundamental investing in this market simply, like just looking at balance sheets and looking at PEs and looking at that at all isn't working. What is working is getting ahead of a story. The reason Baidu popped yesterday, there was a little bit more news on the robo-taxi. That tried to kickstart it a little bit too. And obviously, they're launching, they're getting out there. So there was headlines there too why Baidu had, a bigger move than the other ones. But these stocks are cheap. I own Baba and Baidu in the long-term portfolio. I feel like in the long-term investing standpoint, you can wait. And I mean, that's the downside of options is you run out of time. You don't run out of time when you buy the stock flat out and you're not on merge. You can wait forever. I feel like eventually Baba and Baidu are going to catch on. I feel like eventually they're going to be higher. It's been the timing of these things that has just been very troublesome. And valuation hasn't mattered to investors, but maybe one day it does.
All right, let's get to Brian Shannon. We've got him hanging out backstage. Really excited about this guest. Alpha Trends on Twitter. Without further ado, let's bring Mr. Shannon on Benzinga's Pre-Market Prep. All right, Brian, welcome to Pre-Market Prep. How are you doing this morning?
Doing good. It's early for me, guys. Talking this morning. This is my quiet time. So, but I've been enjoying listening to you guys for a long time. How long have you been doing this, Dennis and Joel? It seems like 10 years or so.
Yeah, it's about 10 years. Yeah. And we've been friends on Twitter for a long time, Brian. We've tried to bring you on before, and then it's just kind of fell through, and we didn't.
What's your time zone? What's your time zone?
Mountain. I'm in Denver.
Okay. So beautiful Denver. Okay. Yeah, a couple of, I never, it's different with the guests, but thanks for coming on today. We know you're a very technical trader, and your VWAP, we hear it mentioned all the time, but before we go into your trading style and your, the way you approach the markets, how much do you pay attention to fundamentals?
I like to be aware of what shapes the psychology of the chart. So I'm interested in the headlines. So, each morning around this time, this is when I kind of go through my bunch of emails with all the headlines, and I like to see what's shaping the psychology of the market. So I actually, Joel, it's interesting that I've said this before, that I view fundamentals and technicals kind of the same. Is that it just tells us what to be aware of. So, I'll be interested in a chart's fundamentals, not because I care about the fundamentals, but when I see strong growth in revenues and earnings, I know that brings about a large group of participants who does care about that. So it makes me look at the chart and say, well, is it backed up here? Just the same as, when I see a stock pull back to the VWAP, I'm interested in the stock, but I'm not going to buy it just because it's touching some, magic number based on the volume weighted average price. So it all comes down to just kind of, like I said, shaping the psychology and being aware of what other people are looking at. China, for instance, but I don't like to trade those stocks because they're just so gappy.
Yeah. That's the problem. It's like a headline comes out from, and again, geopolitical headlines don't have to be war. There's sometimes something else too, where they just harpoon their own companies sometimes too. So there's a lot of overnight risk there too. Brian, I want to talk about and I've learned a lot from you just following you on Twitter. And one thing I always catch myself doing is when I'm trying to be a hero and, buy that stock's going straight down because it's going cheap. I remember you always say, don't buy stocks in downtrends. He always screams that out. And I always think of Brian Shannon yelling over me, don't do it. Like I was looking even at Bristol Myers yesterday. I'm like, man, this stock's getting cheap. And then I think about Brian. I'm like, don't buy stocks in downtrends. So, I mean, when do you look obviously, stocks don't downtrend forever. At what point in time, do you look at a stock that's been beaten up and then it starts to trend up? When is the downtrend actually broken? On what time frame are you looking?
Well, so regardless of time frame, it's kind of all the same. It's just that, back to Stan Weinstein's stage analysis really is the way I learned it, which was Wyckoff. But when you look at Bristol Myers, for instance, it's below a declining 200-day moving average. So to me, that just means it's toxic. I'm going to stay away from it. There's no need to be involved. I love the phrase, Dennis, if they don't scare you out, they'll wear you out.
Ooh,
And
wow.
if you look at
Right.
even like if you look at the Nasdaq, or whatever you want, I mean, from the 2021 high, there was no reason to buy until it was basically February, March, when we had that 200-day moving average start to flatten out. February, March of 23, that is. And that's when this huge rally emerged from. And we're still above that rising 200-day moving average. So just the same, I'm not going to short this market just because I think it's up too much, or on that time frame. You can do the same type of analysis on a 1-minute chart if you want, and go in there and be a lunatic and find shorts all day if that's your time frame. But to me, it's about marrying the time frames and knowing that the larger time frame is, in Bristol Myers, is still in a downtrend. So I'd rather look to that stock and say, it just bounced 10% to the declining 20-day moving average. It's starting to roll over on the shorter term time frame. So now I'm going to short this stock. That's the way I look at it.
When you're sitting at the Brian Shannon desk right now and you're looking at your charts, how many different, like, what time frames do you have? Like, we have the 30-minute because we like the pre-market, we like the after hours and the pre-market action. Dailies are very important. They don't reflect that. They give you more of a, I mean, less price action, but more stable. And then the monthlies. What time frames do you look at?
Great question. I have on my screen right in front of me, I have 4 time frames, and those 4 time frames are just like yours. I hit the symbol and they all populate. So I've got a daily, a 65-minute, a 30-minute, a 10-minute, and then in my upper screen where I don't always look, I have a weekly time frame, and in the bottom right, just to the side of it, I have a 2-minute time frame.
Oh,
You can really fine tune that stuff. So
why the 65 versus the 60?
great question. You haven't heard much feel about that? The market's open from 9:30 to 4. So if we look at that and you look at your hourly time frame, you've got 7 candles or
Oh,
bars. One of those is 30 minutes long. 6 of those are 60 minutes long. So you've got 1 apple and you've got 6 oranges. If you put any, moving average, any stochastic, any type of study on there, what you're saying is that first 30-minute period is more important, twice as important as every other period. So instead, the market is open. So 9:30 to 4 is 390 minutes. So you can look at a 30-minute time frame. There are 13 of those periods per day. Or if you look at a 65-minute, 65 times 6 is 390. So you've got 6 equal periods, Joel, rather than 1 half-hour period and 6 60-minute periods.
So Brian, right now, what charts are starting to look interesting to you? Any to the downside that you're seeing? Oh my God, this is getting way overextended. I mean, we have stocks at all-time highs, but it still feels like at least some of them still feel like there's got room to go. Do you ever look at the charts for short opportunities, or are you mainly going long?
No, I do. So I have a small short position in a stock called GIII, which is an apparel company,
Okay.
and they have, I looked at their revenues, I looked at their earnings, and they're starting to, they've flattened out. And a lot of these, you look at Nike and that, why has this stock held up when Nike is getting smashed? So that longer term chart looks like it has room to the downside. I'm short here for, like I said, with a small piece. I don't prefer to short, especially we're in a bull market. So I'm more interested in looking at what's emerging strength. And I think the biotechs are right there. If you look at the XBI, it keeps knocking at this level. And I think, this time, knock on wood, that we're getting ready to continue higher in the XBI. And I've got more biotech exposure than I have in a long time through a couple other individual names.
Yeah, so when
Oh.
you're doing the biotech exposure, you go in specific stocks, are you trading the XBI? How are you trading that?
Well, I look at the biotechs and I just kind of view them as kind of a toxic group in general, meaning, you see all these little stock. You look at, you look at the morning, gappers up and down. Most of the time, the ones that are up 100% are some little biotech stock, but the ones that are down 60% are some little biotech stock, unprofitable one as well. So I like to look at the ones that, like Amgen, for instance, right now is looking ready to get going here, and that could help this group. I've been long a little one that is profitable called Target Therapeutics, TGTX. I've tweeted about that a couple times. They've got a new drug that is they got approval last year. They had their first profitable quarter. They've got great estimates in here, and there's 26% of the float is short in here. So that I think these shorts are about to get roasted pretty good in this one.
Who is it that shorts these stocks? Like, who's sitting there in a biotech stock and got 26%, short interest here? It's a gutsy call because, like you said, these things can gap up 100% in your face. I'm always nervous. Like, I'm a day trader and I will short stocks, but I don't short any small biotech stocks ever because I know even as a day trader, you hold something overnight and then boom, it's in your face. It's rare for me to short biotech stocks. It's a scary thing to short. Who do you think's on the other side? Like, who is this? Hedge funds? People who know something? Like, who's that 27%?
Someone who thinks they know something, but I mean, you look at the trend here. I mean, certainly you look at the history of the company in that bottom right corner. There's been good opportunities to be short this, but now you've got the stock. The company has a legitimate drug. The estimates are for 76 cents this year. So, going back to your question, Joel, how much do I look at the fundamentals? I know that they have a drug that people are excited about. They're earning money. The estimates are strong. They're growing market share, and there's a big short position. You add that all together with a good-looking chart. It just seems obvious here that this one should be able to continue to move higher. Now, I've been involved at lower prices, and I've actually just starting to scale out a little bit up in here and looking to replace if we get a nice pullback because, again, it's a biotech stock, and I don't fully trust it.
What would you, if someone was just starting trading, today and they wanted to learn the basics of technicals, what would you have them start with, Brian?
I should say my book. But
Talk
the
up your
easiest,
book. Literally, talk up your book.
okay, so my first book is Technical Analysis Using Multiple Time Frames, and that really allows you to look at what you're looking at on this screen is recognizing that people say, are you bullish or you bearish? Well, it depends. If you look at this chart, we're lined up bullish on all these time frames, but some other stocks, you'll look at them and you'll say, well, the longer term trend is down. Look at BABA. The longer term trend is down. The last couple days, it's up. It's just a mess, basically. There's no consistency of trend in here. The daily chart may be a little bit more neutral. Longer term, still in a downtrend. 30-minute time frame, we're perking up. So what is your time frame is something that's most important because there's different messages here so in that book, I spoke about the importance of knowing your time frame and getting those trends aligned, recognizing what stage we're in. So in BABA, for instance, on that monthly time frame, we're maybe in a stage 1 accumulation. And if we start breaking higher, this stock will have a lot of room to run. It will probably make a several year bull market. But right now we're in that phase on the monthly time frame. If they didn't scare you out on the way down, they're wearing a lot of people out.
They wear you out.
Yeah, and each of these rallies just gets kind of smacked down, but the range is compressing, and maybe the tide is going to turn here. So it's worth keeping on radar, and maybe as Dennis is doing, nibbling on it for that eventual turn, as it might be the cheapest stock in the world.
What are your thoughts on Tesla? And how do you approach something like Tesla technically when, obviously maybe, a week or two ago, it was a little easier when it's breaking out through 200, but now you go 200 to 260 in 6 trading sessions. How do you approach something like this if you're going to trade it? Or do you just stay away when it's moved up this much?
I nailed the entry at 187, I think it was, because it broke
Beautiful.
that range and it broke above the year-to-date anchored VWAP. And I was thinking, hey, maybe we'll run to the 200-day moving average. And that was, a 15-point rally up to, 208 or so. Now I think you've got to, you look at it and people will look at this thing and say, hey, it's up too much. And they'll start talking about all the TSLQ arguments. They're bringing those back out. I look at it and say, the trend's your friend. Don't fight it, for sure. My thing on the 15-minute time frame is a 5-day moving average. As long as we're above a 5-day moving average, I would not go anywhere near this thing on a short sale, even for a scalp. So the trend is higher. Enjoy the ride, and if you're nervous about it, it's coming into potential supply on that monthly time frame. So tighten your stops, and then eventually we'll get a pullback. Maybe it pulls back to 230, starts to go sideways, and then we get another rally. But I certainly wouldn't be buying it for anything more than a day trade up here.
Brian, over the years trading, you have, different things that happen to you. Do you have like one trade or one series of trades that really like help frame your trading strategies, like maybe a big debacle or a big winner? Do you have something that like stands out to your mind? Once we like to give investors or traders, something to learn, something to lean on. Do you have something that comes to mind along those lines?
Well, I can talk about where my losses have come from in general is fighting trends. And as Dennis said, I look at a stock in a downtrend and it's just poison. I've trained my mind. And it took a long time to get there, because I used to be, hey, look at how much that's down. That's a good company. And, I can get the bottom and I'll average into it. I'll average more into it. I'll get way too big. And I end up puking the whole thing out with my largest loss of the year. And and that happened to me so many times over the years. Or I would look at a stock like Tesla and say, hey, I'm a smart trader. I can pick the top in this thing. I can short it at, 230. Oh, shoot, it's at 232. Well, maybe I'll add a little bit more. And then it runs away from you. So, one of my mantras is don't buy the dip. And don't short the strength. Don't buy the dip, but buy strength after the dip. Let other people do the dirty work of finding that base, allowing it to turn sideways a little bit. You don't have to be the hero. Let the institutions who go in with hundreds of thousands of millions of shares, let them find the bottom in CMG for you. It's not here yet. We're still declining. We're still in pullback mode. So let them, and Dennis was saying he wants to see this stock turn sideways, do this hook that he was talking about, and let them do the dirty work. You don't have to get the bottom tick. And if you get the bottom tick, it just reinforces a negative behavior, because for every one time you get it, 99 times you're not going to. You're going to experience that pain, and your money could be better off in something else as well. So just don't fight trends is my main thing, especially for a newer trader.
Well, there you have it. Again, Brian Shannon joining us on Pre-Market Prep. I believe the first time ever, but we got to do this again, Brian. I know it's early for you, so we appreciate you getting up early and hopping on with us, but it was a lot of fun. Alpha Trends on Twitter, of course. And if you want to go check out his books, you can go give him a follow there. Brian, thank you again for joining us today.
Great to be on with you guys. Thank you for having me.
Thanks, Brian.
Thanks, Brian.
All righty, guys, we've got about 7 minutes left of the show. Let's go to analyst ratings.
Before we go to analyst ratings, we got some news that broke during the show. We haven't got to it. It happened earlier in the show, and Intuit is coming in the cutting jobs. Go ahead.
Go ahead. I was just gonna INTU is cutting jobs. When we get those specific, 1,800 employees as AI leads to a strategic shift. This is coming from Fortune.
Ooh.
So, as much as we talked about yesterday that I wasn't scared about AI coming for jobs, we're seeing at least an Intuit. But this seems like such a thing that, AI it should be capable of at this point, is being able to help out with taxes and doing something like this. But either way, 1,800 jobs getting cut from Intuit. And again, Fortune is saying this is because of artificial intelligence.
A couple thoughts here. One, I don't know if the market's buying it because the stock's obviously down 11 points. And if the market was saying, yeah, this is, AI and the company's going to be more inefficient, it's going to make more money because of this. I didn't read the details on this. Obviously, we've been doing the show the whole time, so I haven't had time to really dive down to the details. But initial response to the market's like, nah, you're cutting jobs. And one thing to consider is when you're seeing stocks that are really beat up or stocks that are in downtrends and they start cutting jobs, sometimes, cutting the jobs is, to save the company, but sometimes that's to make it more efficient so that they can turn the story around here. When you have a stock that's very near an all-time high, like Intuit, and you're cutting jobs, people are like, oh, is there a demand problem? It's the initial thought is, this is not as good as I thought it was because they're cutting jobs and the stock's up here. And I think that's what the algos, and obviously algos respond to this first, but I think that's what the market is saying here right now is like, okay, here's, a company that is very close to all-time highs. I know we'd hit back to 700 back in 2021, but close to recent highs here. Come a long ways. We just ran from 560 to 660 in about 3 weeks. And now you're cutting jobs. It's like, well, I'm just concerned there's something else happening here. And they're selling first and asking questions later.
Kind of. Dennis is it's just stuck here at 637.82. Is there just a big whale there offering it? No one's lifting them because
I think it's just widespread and it's kind of knocked $10 off and now there's just no interest. It isn't really trading a lot. And again, these $600 stocks sometimes don't trade, which is a $60 stock. There's just not as much. I know it's like you just buy less shares, but people just like the lower price stocks. They don't like to trade the higher price stocks. I mean, Chipotle is a lot more active, and obviously it's volume related because 50 times you don't have to do as much, but it gets more retail action when the prices are lower. And I just think you got the bots initially headed down. Now it's just sitting here and waiting for the market to open.
You're at I'll put the stars there. This is where you're trading at right now. So if you're comfortable just leaning on one low, which is not always the best thing to do when there's, news out on the stock, that one low to focus on would be 635.51. That was your June 27th low. But if you're more of like a double, triple bottom kind of person, there's matching lows at 24.45 and another low at 622.46. So these are the levels, right? This is where it is right now, looking for a test of this daily low. But if you're looking for more on the downside here, you have 3 lows in the lower 620 handle. But things are kind of quiet right now. I want to say there's a step down seller, but it just looked like there's a pause in the action here into it.
Yeah, and I wouldn't be surprised if you see some other companies, maybe companies that either need to Dennis's point, that are trying to cut costs, become more efficient, use AI as, I don't want to say like an excuse to cut jobs, but basically instead of saying, hey, our business is struggling right now, we're trying to make more money, we're going to lay off 1,000 people, say, hey, we can afford to do this because we have AI now. And I don't know, we'll see how this plays out. I mean, we know in the tech world, there's been a lot more layoffs than in other parts of the economy. So if we start seeing layoffs in different parts of the economy, that could be a little bit more worrisome. All right, before we wrap up, we've got 2 minutes left. Shall we do some analyst ratings?
Boy, we had a lot to cover too. What's the big one?
Carvana is the big one today, I would say. Getting an upgrade here. And here's a stock that's been in a consolidation period between 120 and 130. It's a retail loved stock. And one thing to consider with ratings, when you're seeing one that's very widely followed in social media, it can have more of an influence than if the stock's just not cared by social media. So Carvana is loved by, the Reddit boards. It's loved by a lot of social media platforms. So it's going to have some retail interest, which can be a driver as well. Carvana trading up 5 points. I wouldn't fade this because you get it up 5 points, it starts to look like it wants to break out. So just from a technical basis, the stock starts to look a little bit more attractive. And we have definitely just had Brian Shannon on. We've definitely been an uptrend in the stock for the last 2 years. So the longer term trend is up here, even if you want to go out very far, maybe it's not. You can go back to the monthlies and say, well, 2021. But we've been in a 2-year uptrend here. You're getting a rating that's going with the trend. Sometimes those can kind of, even squeeze the shorts a little bit more here. So I'd be cautious just fading this CBNA.
Closing high of the move, 132.88. Haven't reached that yet. We sniffed 132. So if you're looking for follow through that pre-market high, always the most important thing when you get something on a rating, you get it moving. People are going to love it. They're going to love it through 132. They're going to take a peek at 132.88. That's the closing high of the move. And if you're super bullish or want to see a next couple days, 136.92. That was your high to end the month of June.
The other
All
one
right.
I would go is Spotify if we've got a second here.
All right, we got a second. Let's do Spotify real quick as well.
That is getting downgraded to sell by Redburn Atlantic. Not a huge firm, boutique firm, but when you get the sell rating on it, everybody takes notes because there just isn't a lot of times that they come out with a sell rating. And this is a completely contrarian call as well because Spotify has been trending up and it's paused. It kind of, it's just lost direction here for the last month where it looks like it's in a consolidation period to go higher. Now you get, a downgrade here to sell. And it looks like it's going to resolve itself to the downside. If Spotify loses 300, then your momentum starts to break and your short-term trend starts to break, and it starts to get interesting. So as much as I wouldn't fade the Carvana, I don't think I'd be buying the Spotify downgrade here either. This could have follow-through.
I like that area. I mean, we're trading below the recent consolidation range. That was at 310. So if you're looking to sell this on a pop, the bottom of yesterday's range was 310.64. Doesn't feel like you're going to see it right now. So the next daily low I mentioned from this area is 30079 on June 13th. That's the low in Spotify. And just another note, I just wanted to, these ratings are moving stocks. So
they are.
I mean, look at that. Jemiah yesterday, benchmark. I mean, come on. If you look at that movement, a little bit of a retreat today. But in the absence of, we have the news tomorrow with the CPI, but in the absence of news coming into earnings season, you got to be aware that the catalyst for stocks can be analyst ratings. And that's what you have seen at least yesterday or over the last few sessions.
I will say just on the Spotify front, I have heard, murmurs seen on social media and heard actually in person from some people that people are switching to Apple Music because the actual audio quality is higher on Apple Music than it is on Spotify. I've never noticed that. I have Spotify and I'm never listening to the song being like, wow, I wish this was 5% higher quality. I'm sure there's not that much of a difference, but I have been hearing that. So if that starts going, the other thing, and we're wrapping up right now, but the other thing we missed today, or that I wanted to get to, AEHR Air Test Systems trading up 20% this morning after releasing some preliminary Q4 results. Again, this is kind of tangentially in the semiconductor space. They're doing testing for automotive and mobility chips there. So, again, if you're looking for the pick and shovel plays in the semi space, this is one of them. A little bit of a smaller stock, only a $360 million company, but I saw some people mentioning it in the chat. AEHR trading up 20% this morning on those preliminary results. That will be it for us today, though. 9:03 a.m. Joel, who do we got coming on with us tomorrow?
You guys are going to get it right away. Who do we talk to break down the inflation data?
You're my boy.
Blue, not red.
My boy Blue will be joining us.
Blue, orange, blue. You're my boy, Blue. You're my boy.
Blue. All right, Blue will be on with us tomorrow morning. We'll be breaking down the CPI data. This will be our biggest morning of the week tomorrow in terms of economic data that will give us more insights into if the Fed will be able to give us that cut in September. Guys, thank you to everyone who tuned in with us this morning. Please smash the like if you haven't already. And we do have live trading starting up right after this. We will see you guys bright and early, 8 a.m. tomorrow.